This video is created by Jagrat Creation. It is on joint venture accounts, wherein separate joint venture books are being maintained. I want to solve one sum wherein separate books are going to be prepared for joint venture transactions. Observe the sum on the screen which I intend to solve. Somnath of Sanjan entered into a joint venture with Madhubhai of Malwa to sell TV and to share profits and losses in the proportion of 1:2. Somnath contributed 1 lakh, Madhubhai contributed 2 lakhs toward the joint venture, with which a joint bank account was opened. Somnath bought 30 TV sets at rupees 6,000 each and paid for them from the joint bank account. Custom charges, insurance premium 800 and 2,200 respectively were paid by Somnath from his private cash. Madhubhai bought 20 TV sets at rupees 5,600 each, the price of which was paid from joint bank account. The whole lot. What is the total lot? Whole lot means what is the total lot? That is, first purchase 30 TV sets and 10, 20, 30 plus 20, 50 TV sets is known as whole lot. Out of the whole lot, except 5 TV sets which were damaged in transit were sold at a price of 8,000. So 50 TV sets whole lot. 5 TV sets are damaged. So 50 minus 5, 45. 45 TV sets are sold at a price of 8,000 each. Madhubhai spent 500 for each of 5 damaged TV for repairs and paid them from his private cash. So repairs expenses are paid by one of the part of Madhubhai. They were sold by Madhubhai at rupees 6,400 each. So 5 TV sets are sold at rupees 6,400 each. Prepare joint venture account, joint bank account, ledger accounts, and the co-venturers account. Let me start preparing accounts. This is my joint venture account. This is the details of the sum. Joint bank account, partners capital account, co-venturers account, Somnath and Madhubhai. They share profits and losses in the ratio of 1:2. So I write profit sharing ratio at the top for my convenience. 1 lakh contributed by Somnath. Amount contributed is deposited in the joint bank account. So joint bank is the receiver, debit the receiver, joint bank account debit. Somnath is the giver, credit the giver, Somnath capital account credit. So joint bank account debit to Somnath capital account credit. Same way, entry for 2 lakhs, 2 lakhs given by Madhubhai. Joint bank account debit to Madhubhai account credit. Bank is the receiver, Madhubhai is the giver, credit the giver, debit the receiver. So joint bank account debit to Madhubhai account credit. Now 30 TV sets are sold, 30 into 6,000. The payment is made from joint bank account, so it will be recorded on the payment side of joint bank account, that is credit side. Purchase of TV sets. The TV sets are purchased for the purpose of sale. So these purchases will be debited to joint venture account. So joint venture account debit to bank account credit, payment is made from bank. 30 into 6,000, 1,80,000. Insurance premium and customs paid, 800 plus 200, 2,200 paid by Somnath. Somnath is the giver, credit the giver. This is an expense of joint venture business. So joint venture account debit to Somnath capital account credit. Joint venture account debit to Somnath capital account will be credited with 3,000. Total of 800 plus 2,200, 3,000. Somnath has paid. So Somnath is the giver, credit the giver. So Somnath account is to be credited. 20 TV sets are purchased. Payment is made from joint bank account. Purchases will be debited to joint venture account. Joint venture account is a functional account. Its function is to find out the profit. It is prepared on the basis of matching concept. It is allied to profit and trading and profit and loss account. All purchases, expenses and losses are debited. Revenue, incomes and gains are credited. Difference is worked out, that is profit. that will be shared amongst partners. So this is a purchases joint venture account debit 2. Joint bank account credit 5,600 into 20, 1,12,000. Now the whole lot, as I told to you, 30 plus 20, 50 sets are purchased, 5 are damaged, so remaining 45 are sold at a price of 8,000. The amount received will be deposited in joint bank account. So joint bank account debit, how much? 45 into 8,000. It is a sales. So joint venture account is to be credited. And so joint venture account is credited with the sales. 50 minus 5, 45 into 8,000. So 3,60,000. The proceeds, sales proceeds are deposited in the joint bank. So joint bank account debit, sales is not credited to sales account, but it is to be credited to joint venture account, because it's a short duration partnership. Now repairs expenses for 5 TV sets are paid. Expenses of the joint venture business debited to joint venture account. Who has paid? Madhubhai is the giver. Credit the giver. So Madhubhai account is to be credited with 2,500. Now all these 5 TV sets are sold at a price of 6,400. So 6,400 into 5, 32,000 is the proceeds, sales proceeds that will be credited to joint venture account. And the amount received is debited to joint bank account. Bank is the receiver of the sales proceeds. So joint bank account debit to joint venture account credit. 5 into 6,400, 32,000. Now all the transactions of joint venture are being done. Find out the profit by preparing joint venture account. So total of credit side minus total of debit side, you will get the profit. That will be distributed in the ratio of 1:2. 1/3 is the profit of Somnath and 2/3 is the profit of Madhubhai. So 9,400 into 2/3, 9,400 into 1/3, 31,500 and 63,000 is the profit. That profit is credited to the partner's capital account. So Somnath capital account credit and Madhubhai capital account credit. After crediting the profit, we should redeem the capital of the partners because the firm is to be closed down. It is a short-term partnership. So amount to be paid to Somnath, 1 lakh plus 3 lakh plus 31,500. So 1,34,500 is to be paid to Somnath. And Madhubhai is to be paid 2,65,500. So this is the amount to be paid to Madhubhai. The amount is paid to Somnath. Somnath is the receiver, debit the receiver, Somnath account debit. Payment is made out of joint bank account. So joint bank account is to be credited for that. Similarly, payment made to Madhubhai. Madhubhai is the receiver, debit the receiver, Madhubhai account debit to joint bank account credit. This is how the payment has to be made from joint bank. Now, payment is made, partnership comes to an end. So total of receipts and total of payment should agree because the business is closed down. So if you try to have a total of both the sides of joint bank account, you will find 6,92,000, 6,92,000. This is how agreement of the joint bank account means total of receipts and total of payments matches against each other, implies that we are right for the sum. So this is how the sum wherein independent books for joint venture are being maintained is explained to you. Just observe the sum on the screen. I think you have followed all these things. Thanks to you.